Hello, everybody. Welcome back. My name is Rajiv Ram, and I'm CRU's fertilizer demand analyst. Today, I would like to thank the GPCA for inviting me here to speak today. Today, I'll be speaking about the agri-nutrients landscape, trends, and challenges. This is just a brief legal notice I have to go through. Now, in terms of what I will be talking about today, I'm going to be focusing on five focus areas. Firstly, I'll start off by talking about the crop markets and what is driving prices here. Then I'll move on to the short-term outlook for fertilizer prices. Taking these two variables into account, I'll give an insight on fertilizer affordability. Then I'm going to provide a demand overview of 2021 and outlook for the next year in 2022. And finally, I'll talk a bit about recent changes on regulation around efficiency and sustainability and how that has affected demand trends. So to start off with crop prices, these are a key driver of nutrient demand. In this diagram, on the left-hand side, I'm showing the CRU crop price index, which is a weighted average of the key grains and oilseeds, including corn, rice, wheat, and soybean. This is versus the global grain and oilseed stocks to use ratio ex-China on the right-hand axis. Any stocks to use ratio below 18% is supportive for crop prices, whilst any ratio above 20% is a pressure point for crop prices. And we can see over the past 20 years in this diagram, crop prices generally respond to these levels of the ratio. Now, in the recent 12 months, crop prices have really rallied, and they are now at an 8-year high due to a tighter supply and demand balance in the crop markets. In the past 2 years, the stocks to use ratios have rapidly declined, reflected by lower output in key producing regions, as well as strong demand as countries emphasize food production following COVID-19. One of the key drivers, upside drivers, has been China's appetite for grains and oilseeds imports. And as they rebuild their swine herd after African swine fever in 2018, there has been an upside for imports there. So if we, for example, up until 2020, China was importing around 3 to 5 million tons of corn. But last year, this exceeded 11 million tons. And this year, corn imports will exceed, we expect them to exceed 20 million tons. So there's been an upside, particularly for corn there. And why is this? Well, as they rebuild their swine herd, there's a greater intensification of pork production, greater investment in large farms. Therefore, there is a need for more compound feed. And the feedstocks tend to be corn and soybean. Also, the Chinese domestic corn markets is tight. So that's why there's been some upside there. The stocks to use ratio is forecast to decline again, according to the latest statistics this year, due to a combination of supply and demand factors. On the supply side, in Brazil, safrinha corn production is going to fall because of drought related to the La Nina weather phenomena. And also in North America, we are seeing dryness in as well as Russia, that is going to affect wheat yields and production. On the demand side, as I mentioned, there's an emphasis on food production due to COVID, following COVID. So there's strong food, feed, and non-feed demand across all the end uses. Therefore, from now until the end of 2022, due to this tightness in the markets, we expect crop prices to remain strong. So now I'm going to talk about the short-term market direction of fertilizer prices within the 6-month range. But before talking about the forecasts, if we look at the current trends in fertilizer prices, prices have rallied beyond expectations in 2021 and continue to remain high. There has been some pullback in NNP markets, but potash prices continue to shoot upwards. In general, fertilizer prices continue to remain high due to strong crop prices as well as short-term supply disruptions. Now, moving on to the individual products. If we look at urea, particularly at the NOLA price, Hurricane Ida has led to force majeure, which is creating upside in the near term for the NOLA benchmark. There have been 4 plant shutdowns around the Louisiana area, so there is some supply pressure there. In the Middle East, price is going to be supported by import tenders from India. In China, there's some softness or weakening there in the near term due to fertilizer restrictions on fertilizer exports. Overall, prices during over the next 6 months are likely to be firm through to Q4, supported by strong demand in Brazil and India, and we expect them to soften slightly after that in line with seasonality. Similarly, for phosphates, prices are forecast to remain stable in our forecast period. Again, the NOLA benchmark is seeing some strength there due to Hurricane Ida and the impact there's been on production. East of Suez, there's been stock drawdown in India, which is expected to lead to upside for deliveries in Q4 in the Rabi season. So currently stocks are at around 2 million tons. DAP stocks are at 2 million tons in India, compared to around 4.5 million tons last year. So there's going to be an upside there for deliveries. Finally, global potash prices are continuing to rise, but slow down towards the end of 2021. The key factor for the strength and the increase in potash prices has been the sanctions placed on Belarus from the EU and the US, which is causing uncertainty of supply. So now that we've looked at fertilizer prices and crop prices, it'll be interesting to see the impact on fertilizer affordability. So fertilizer affordability is a ratio of fertilizer prices to crop prices, demonstrated as a series of indexes in the diagrams on the slide. So the rally in fertilizer prices has led to a rapid fall in affordability levels, as we can see on the diagram on the left-hand side, particularly if we look at this from a monthly perspective. So we can see that affordability was trending towards very favorable levels at the start of 2021, but it is now shot upwards. However, it's important to bear in mind, if we do look at this from a annualized perspective, fertilizer affordability is still trending at favorable levels. So in 2020, fertilizer was at its most affordable, as you can see in the right-hand diagram, in the past 2 decades. So we're starting from a low base. Nonetheless, this fall in affordability in H1 2021 is leading to concerns and questions around if this could lead to demand destruction in 2022. Well, our short answer to that question is we do not expect demand destruction next year in 2022. If we summarize what has happened in the past 2 years, so 2020 and 2021, demand growth across the key products in fertilizers has been robust, driven by fertilizer affordability, favorable levels there, driven by high crop prices, driven by and also increasing crop area. As I mentioned before, the emphasis on food production is also has led to strong demand. But if we do look towards next year, we expect demand growth to still be positive, but not as robust as the previous 2 years. But this will still be supported by, as I mentioned, high crop prices until the end of 2022. That's our forecast. Also, farm margins across the world are looking excellent at current crop prices. So even if fertilizer prices do increase, farmers will be reluctant to cut application rates at current prices. Coming back to the affordability angle, our analysis shows there's a loose correlation between fertilizer affordability and demand growth. Unless there's a marked fall in or significant fall in affordability like there was in the financial crisis of 2008, 2009, there's not a substantial impact on demand. And given where we are trending with those affordability levels, they're still favorable in terms of trend. Also, there are low pipeline inventories across the fertilizers, so we expect some upside there. So to go to the products, if we look at urea in the first diagram, demand is forecast to expand again in 2022, at more moderate levels than the previous 2 years. Corn is a nitrogen intensive crop, and the corn market is tight, so we expect planting intentions to be positive next year, hence particularly around the Americas, so an upside for demand there. For phosphates, demand is forecast to jump again. Chinese demand is anticipated to slip following inventory buildup, but demand will be supported by US and India. And finally, potash demand is forecast to grow in 2022 as well. It's been an interesting few years for potash. In 2020, demand surpassed 71 million tons for the first time ever. It was a staggering increase in growth. In 2021, there was a slight correction, but still maintained at a high level. But we think China will come back into the market strongly in next year, as well as steady growth in Brazil and the US. And finally, I just want to talk a bit about recent changes in regulations around efficiency and sustainability and how that has impacted demand trends. What is interesting is efficiency measures in emerging economies have been put on hold since 2020 due to COVID's emphasis on food production. So, for example, China is the best example here. China, and up until 2020, demand from around 2014 was declining on NMP because they had a policy to reduce or a 0% policy, a 0% growth in chemical fertilizer use. But 2020 and 2021, demand actually increased as they increased crop areas and emphasized food production. We expect the trends to decline again from next year onwards and into the medium term. But developed markets like Europe, the pandemic has not had an effect on the efficiency drive. So nitrogen is a nutrient being targeted here, as it's most susceptible to runoff, as well as contributing to atmospheric emissions through volatilization, with urea being one of the biggest contributors there. So Germany last year banned the use of untreated urea by farmers. Poland this year has also banned urea use in granular form. The UK is also considering a total ban on solid urea fertilizers. So the impact of these bans can be reduced if urea is used in conjunction with a coating agents or treatment technologies like inhibitors. Also, overall in the European area, last year the European Commission proposed a plan to bolster organic farming, aiming to reduce fertilizer consumption by 20% by 2030. So all these factors and regulations coming into play are really indicating that there could be a shift in product trends. So we see more upside for nitrates and NPKs in the medium to long term, for example. So I'd just like to summarize now with, we expect crop prices to remain strong until the end of 2022 due to a tighter grains and oilseeds market. The strong crop prices have been one of the key reasons to support fertilizer prices. Fertilizer affordability is less favorable, but we do not anticipate demand destruction. Demand growth is still forecast to be positive in 2022 across the products, but not as robust as the previous 2 years. Also, COVID-19 has placed efficiency measures on hold in some regions, but in Europe, the drive to sustainability is still ongoing. Thank you, everybody, and I look forward to hearing your questions.